Good afternoon, and welcome to everyone joining us for today's special webinar presentation by Nish Parekh as he shares his expertise on the United States CARES Act as a response to the COVID-19 pandemic and the resources that are available for you and your law firm. Nish Parekh is a professional accountant with over a decade of experience in this field. He is the founder of Neovision Consulting Incorporated, a certified public accounting firm located in Cranberry, New Jersey. As an expert in technologically advanced accounting systems, Nish serves as the firm's solo and small law firm specialist, working closely with lawyers to help develop strategic accounting systems to stay in compliance with their state bar regulations, and helps lawyers make informed business decisions to grow their organization effectively. Nish's favorite part about being a law firm accounting specialist is working with the law firm owners to reach their organizational goals and create business opportunities. My name is Cameron Grooms. I'm the VP of Marketing for Peace and Latin Matters, and I'll be your host for today's webinar session. All of our webinar attendees will be in listen-only mode for the duration of this presentation. If you have any questions, please feel free to ask them via the questions pane located on your webinar control panel, and we'll answer your questions at the end of this presentation. Also, please refer to the handout section on the webinar control panel, where you can download your copy of this presentation with supporting forms and regulations, and also a link to the free PPP Loan Forgiveness Application calculator and creator. Please note that we are recording today's webinar, and all attendees will receive an email tomorrow with a link to the recording of today's presentation for your future reference. And one final note, as I'm sure you can tell, we are currently working from home, so we appreciate your patience in case any unforeseen disruptions occur. Now, please help me in welcoming our presenter for today's webinar, Nish Parekh, as he discusses the latest revelations of the CARES Act and how it can help your business.
Okay, thank you, Cameron. Thank you for the kind words. So today what we'll be doing is we'll be talking about the CARES Act, and specifically as pertains to the Paycheck Protection Program, Loan Forgiveness Application, and also some other avenues of making or taking advantage of credits or benefits that are provided as part of the CARES Act. I know this has been a big elephant ever since the whole COVID-19 stuck through. It's been an ever-changing plan, so we'll try and go through as much as possible, but understand that there's potential chances of other things getting changed, and as they get changed, we'll definitely be able to update. And if you have any questions down the road, you will have my contact info at the end of this presentation as well, so you can feel free to reach out to me. So a couple of things that we'll be covering as part of this entire presentation will be three specific parts of the CARES Act, and that's the Title I, Title II, and Title III. These are specific from a perspective of what businesses have been made available as part of the CARES Act and what they can take advantage of. The biggest one is the Paycheck Protection Program, or the PPP, as you'll hear me referring down through the rest of the course. And then further to that, later on, after some changes were made, there was a PPP Flexibility Act that was also introduced. So we'll be talking about that. And we'll spend quite a bit of time on the PPP loan forgiveness and the application thereof. We'll touch briefly on Title II and Title III. These are other benefits that are part of the CARES Act that businesses such as yours can take advantage of if you do meet the requirements and qualify for it. Okay. As Cameron mentioned, this presentation will be available for you to download. So I would recommend everyone just listen to me. I love talking, and you'll hear that. So let's talk about the PPP program. So what was the point of this program? What was the requirements? What were the loan amounts, and how do you plan for it? So there's a lot of things that went into the whole planning and application process, and there'll be even more work in terms of applying for and or planning for the loan forgiveness part of it. If you or anyone you know received the PPP funds, then you know there were two steps to it. One was the application part, and the second part is how do we get all these funds that we may have received forgiven so we don't have to pay it back. So basically it's a question of optimizing on making sure that you use the funds rightfully, A, and then B, how can we get it all forgiven? So these are some of the topics, again, that we'll be covering through the rest of this presentation. So let's start with the purpose. So the whole purpose of the PPP funding was, I can say is as well right now, because we still have one more day before the PPP application deadlines expire. So June 30th is the magic date for the application. Will there be a chance of that being extended? Possibly, but currently it's still as of June 30th. So the goal was to inject money into the economy. And the way it was set up was, even though you would receive the funds, the goal of that was to allow maintenance of staffing levels, right? So what they put in there was conditions in terms of what you could put those funds to use to. It was mainly payroll and then some other operating related expenses, allowed operating related expenses. The other purpose was also to provide business incentive to continue to pay employees or hire back if you had laid off any employees during the initial period when things went all haywire. What were the borrower requirements? So when you compare the Paycheck Protection Program borrower requirements versus a regular SBA loan or any other loan borrower requirements, the PPP borrower requirements were very much more scaled down. It was very much in terms of what's your borrower certification? Are you certifying that you truly need the funds? So it was highly dependent on borrower certification that the loan is necessary to sustain operation, right? So it was all good faith certification. Also, the certification was in there to say that these funds will be used for approved purposes only. And as you'll notice as part of the Forgiveness app, if the funds were not used for the approved purposes, then you do have to end up paying some of that money back. The approved purposes was retain workers primarily, as I mentioned before, and or other allowed use of funds. And we'll be covering the other allowed use of funds shortly. Also, you're only restricted to one PPP application. Now you notice I've put in there in brackets for now. So there is a chance that a second application of PPP will be allowed, but it's not in place yet. We believe as of so there's a legislation that's in place, and I believe it's going to be talked upon or decided upon after the July 4th. So hopefully a second application will be allowed as well. And in good faith certification, again, no other funds were received from the SBA for the same purposes. In essence, basically what's that saying is that you're not going to be double dipping, right? So you will not say, hey, I'm using the PPP funds to pay my employees, and then you have another loan that you received, and you're saying, hey, I'm using these other loan funds to pay my employees. So you're sort of double dipping, trying to take into account two expenditures or one expenditure towards two loans that were received. The biggest criteria in here was that you should have been in business as of February 15th, 2020. So if you started your business February 16th or thereafter, then you were not allowed to apply for the PPP funds. How much could you borrow? So the borrowing amount limits was basically capped at 2.5 times the average total monthly payroll costs. You notice that the payroll cost is in quotes. So we'll talk about what the payroll costs were deemed to be as part of that average computation. So payroll costs included any compensation paid to employees, whether it be salary, wage, commission, or cash tips, and it was capped at $100,000 annualized basis. So if you had an employee making over $100,000, the average computation when you would put it in for your PPP application, you would cap it at 100,000 and then determine what the average would be for 2.5 times. It also included paid sick leave, vacation, and or any severance pay that you'd have provided to your employees. One big thing here was also it included healthcare benefits and retirement benefits. So this is the employer portion of healthcare benefits and or retirement benefits that was paid. Not what the employee was contributing to those healthcare benefits or retirement benefits, but the employer portion contribution. And it also included the employer portion of state or local taxes. Now note what I mentioned here, it's state or local taxes. So that does not include the employer portion of federal taxes. Okay, so it's just the state and or local taxes. If you were self-employed, so if your tax is an LLC or a sole proprietor, the average monthly payroll cost, in quotes, is computed based on your 2019 profit or amount subject to self-employment taxes. So we'll be talking about this here, but when you're a sole proprietor, you'd have your Schedule C, the net income that you showed there in 2019, you would take that amount and average it out and then get you 2.5 times the average total monthly payroll cost. If you're a K1 LLC, then you would take your 2019 K1 and use the net income from the K1 amounts and obtain your average monthly payroll cost. For corporations, so S Corps or C Corps, the salary was dependent on the payroll that you ran through for your personal self or as an owner employee in that entity, and not how much draws that you took or what was reported on your K1. So if you are not on payroll in a corporation, so S Corp or C Corps, then you would not have received any benefit out of it. Okay, so planning. So planning for the PPP loans. So once you applied for it, you received your dollar funding, now comes the time to start planning. How will you use or disperse those funds and then optimize on getting the biggest forgiveness or maximize on your forgiveness that you'd receive on it. Ideally, you would want to receive 100% forgiveness, but if you're not able to use the funds to be able to obtain that 100%, then at least you would try and maximize on how much you'd receive as forgiveness. PPP loans, initially, when the program was released, it was on a 75-25 split. So 75% payroll use, 25% other allowable non-payroll costs. With the PPP Flexibility Act that was passed, it was updated in there that you could use those funds, and then when you're applying for your forgiveness, if you had up to 60% on payroll related use, and they would allow for another 40% on other allowable costs. Okay. One other thing from a planning perspective is you need to make sure that you document all your expenses related to your PPP loan use. Ideally, you keep them digitally, but if not, make sure you have your paper copies of all the proof of where you use those funds. So be it payroll reports, check copies, bank statements, etc., etc. From a use of the PPP funds, as we all know, timing is everything. We have a table that will be coming up that will show us in terms of timing what covered periods were allowed in there and or amended to be allowed. So timing is everything. It's not like you'll be able to use these funds over 2 years. It's not like you'll have the opportunity to use these funds over 8 months, but there is another time period in there. So besides the 60-40 ratio that is allowed, there's 2 additional rules that can affect your forgiveness amount, and that's your average monthly full-time equivalence. That's what FTE stands for, full-time equivalence, and or salary reduction greater than or equal to 25%. So we'll be talking a little bit more about this in terms of how it will affect your computation for the forgiveness, in addition to the 60-40 ratio. Now, the next table that I'll be displaying here, this is a pretty important table. This table basically reflects the changes that were made in the PPP Flexibility Act to make it more, and I'll use the word advantageous because that's what exactly it is. So they made it more advantageous and better for people who will be applying for forgiveness. So it's a lot better than what was in the initial CARES Act PPP portion of it. So let's take a look at some of the key criteria in here. So loan maturity. With the CARES Act, you were at 2 years loan maturity at 1% interest. With the Flexibility Act, this has been extended to a 5-year 1% interest. So if you do have any non-forgivable portion of your PPP funding that you received, then with the Flexibility Act now, you'll be able to pay it over 5 years at 1% interest. However, keep in mind that this 5-year 1% interest is only applicable to loans that were made or disbursed after June 5th, 2020. If you had a loan that you received prior to June 5th, you're still at the 2-year 1% interest rate mark, but there's every option that you have where you can go talk to your bank and see if both of you can agree to a 5-year 1% interest. So the banks do have the flexibility of making that happen, but it all depends on your relationship with the bank. Covered period. Initially, when the PPP loan funding was out, it was stipulated to have a covered period of 8 weeks. So what that meant is you would have had to use, be it on the 75-25 split or the 60-40 split within the 8-week period. With the Flexibility Act, and this was very much due to the fact that a lot of businesses were either shut down due to state mandates or CDC requirements or OSHA requirements, but you received the funds and you couldn't use them. So how do you go about then still applying for forgiveness? So this covered period was extended to 24 weeks or earlier, but not past December 31st, 2020. Okay. This applies to all PPP loans, including loans that were dispersed or received prior to June 5th. However, if you did receive your loan prior to June 5th, you have the option of still using the 8-week if that works out better for you. And we'll look at scenarios down the road in terms of what covered period you should use and what works most beneficial for you. Full-time equivalent waiver. So the initial date was by June 30th, you would have had to have met the full-time equivalent waiver, be if you need to hire additional employees to make sure you met your FTE requirement, or make sure that you've had the opportunity or given the opportunity to your prior employees to come on board back, but let them say, hey, no, we don't want to come back. So that would also apply towards your FTE. With the PPP Flexibility Act, the magic date now is December 31st or the date of your forgiveness application. So if you do happen to apply for forgiveness prior to the December 31st date, then that will be the date that will be your magic date for your FTE equivalent waiver. Okay. And this applies to all PPP loans. Non-payroll cost limits. Initially, as I've been mentioning before, it was a 25%, but with the Flexibility Act, you're now up to 40%. So this applies to all PPP loans a lot better than what it was before. You can utilize up to 40% towards allowed non-payroll cost limits, and allowed non-payroll costs, which we'll be looking at again shortly, are things like utilities, rent, some insurance, etc. Loan deferral period. So initially, if you had any portion of your PPP loan that was not forgiven, you would have a deferral of up to 6 months before you would have to start making payments. Now with the Flexibility Act, the deferral has been put on, or the onus in terms of when the deferral will end is put on, rightfully so too, in terms of when the lender A receives the forgiveness from SBA. So it is in the interest of the SBA to determine and compute how much you'll be forgiven and how much you still have to pay, because that is when the loan deferral time period will start. And this applies to all PPP loans. We'll also talk about payroll tax deferral, and there's a slide towards the end of this presentation that talks a little bit more about this. So initially, when the CARES Act was introduced, there was a benefit that was provided in there where employers could take advantage of payroll tax deferral, or the employer portion of Social Security. And that was only applicable to firms that were not eligible to the PPP loan, okay, and if they were forgiven. But now with the Flexibility Act, everyone is eligible to take advantage of that payroll tax deferral. So we'll be talking about that, but again, it applies to all PPP loans. And the loan application deadline, as I mentioned, June 30th, which is tomorrow. So if you haven't applied for one, I would get on it ASAP, but not whilst carrying out this presentation, because there's a lot more information. But as soon as I'm done, then that would be something that you should look into. One thing I want to make note here is that not all banks are taking applications for the PPP forgiveness. A lot of them have started shutting down the applications, but there are some that are still out there that are taking. IRS has released a tool that can help you look for lenders that are still providing, or you can go look at sites like PayPal or Cabbage. They're still open. Biz2Credit, I believe, is still open, and they're taking applications. But again, it's one more day to it. There's a lot of funding that was still available as of last week. It was close to about 125 to 130 billion that was still left over in there. Okay, forgiveness application. So this has been a big moving target. The initial application that was released was an 11-page application, very demanding, very time-consuming, very not easily comprehensible. Even for us as accountants, we were scratching our heads in certain portions of the application, trying to understand exactly what the SBA was looking for. However, on June 16th, 2 new applications were released. One was the easy application, which is a 3-page application, and then a full application that was also released, which is about a 5-page application. Much shorter than the 11-page that was out there. The easy application should really apply to most of the solo and small law firms because it should take care of a lot of the requirements in there, and we should be able to get away with the 3-page application. Much easier, much more straightforward. Still some caveats in there, but a lot better than the 11-page. In the application, a couple of things that you have to remember from a requirements perspective is as you're entering your information or filling out the applications, it should match your loan application. So when you applied for the PPP loan, whatever information you use there, you need to make sure you match that same information in the forgiveness application. You'll also need your PPP loan number. If you don't have that, I would recommend you get that from the bank that issued you the PPP loan, and they should be able to provide it to you. You'll also have to have your PPP loan amount and the disbursement date. The disbursement date is very key and critical because that will determine whether you can take advantage of the 8-week period, or you can take advantage of the 24-week period, or you can take advantage of either or based on your disbursement date. We'll also look at the disbursement date as it applies to payroll and payroll amounts computation, because there are two ways that you can do that. So another slide past this will be telling us how to go about that. You will need to know the employees at the time of application and at the time of forgiveness application. So this will determine what your full-time equivalents are, and also it'll help compute if any of the other waivers come into play in terms of if your payroll was reduced for any of your employees by greater than or equal to 25%. Have records of all your payroll details, so schedule, covered period. Ideally, what you would want to have is, if you don't have a third-party payroll provider, most third-party payroll providers will be generating these reports that are acceptable by the PPP loan forgiveness. But if you don't have that, then make sure you have some level of details that you can back up if any questions come up when you apply for your forgiveness application. One key thing to remember, again, similar to when you applied for the PPP loan, it was all on borrower certification and good faith certification. Similarly, the forgiveness app, again, is very much on borrower certification. And this shouldn't be taken lightly because just by signing, and if you notice what I've highlighted here, by signing below, you make the following representation and certifications on behalf of the borrower. And there's a line of items in there where you're signing and or initialing against. And the key thing in there that says is that all this information that you provided during the application and what you're providing during your forgiveness is true. So if any of it turns out not to be true, then it could be considered a criminal act. And you want to make sure that you are in compliance with all the things that you need to be in compliance with and not be committing any criminal acts. Okay, let's jump a little bit into the forgiveness amount calculation factors. So key things, again, coverage period, what's the allowed use, what's your employee count, and then payroll reduction. Okay, coverage period, up to 24 weeks, and make note of the word up to. So what that means is you can opt to use the 24-week option or earlier if you do happen to apply for your PPP loan forgiveness prior to that. Or you can use the 8-week option, and this is only for the loans that were dispersed prior to June 5th. The allowed use, again, payroll costs plus covered non-payroll costs in a 60-40 split. So let's go through each one of these slides and we'll talk about coverage period, allowed use, employee count, and payroll reduction. So let's talk about the covered period. As I mentioned before, when it comes to payroll covered period, by default, the way the CARES Act was written out to stipulate in terms of your covered period and the disbursements, it was based on the fact that the date you receive your disbursement, that would be the start of your covered period. So the day you receive your PPP loans from the lender into your bank, that will determine what the start date for your covered period is, okay? Not necessarily when you got your approval, not when you applied for it, but when you receive the funds in your bank account. That's the start of your covered period. Now, a lot of firms, what happens is that you may receive your funds on date A, but your payroll may not be running up until the following Friday if you're on a bi-weekly payroll period, or a semi-monthly payroll period, or a weekly payroll period. So with that in mind, the application or the PPP Act allowed an alternative payroll covered period, and that alternative covered payroll period would be the first day of the first payroll cycle in the covered period. So again, that date when you receive your funds is still very much important, because the first payroll cycle that runs after that would be part of your alternative payroll covered period. Payroll costs. When do you determine when these payroll costs are paid? So clarification on the application was they're considered to be paid on the day that the paychecks are distributed or the borrower originates an ACH credit. What that means is you run your payroll, you distribute the checks. You don't have to wait for the employees to deposit those checks and get them cleared from the bank. The mere fact that you distributed the checks means that those funds are already accounted for and named for, and that will be used towards the amounts that you will then be able to apply towards a forgiveness computation. Alternative payroll cover period is not available for semi-monthly or monthly payroll schedules. And this is mainly because of the fact that if you're a monthly payroll schedule or a semi-monthly payroll schedule, with the 8-week or the 24-week, you'll still be able to hit those time frames or those dates when you're computing how much money was used towards the payroll costs. There's no alternative covered period for non-payroll costs. So if it's things like rent, utilities, you cannot opt to use an alternative covered period. And that is because most of those costs you should be able to account for from the time of receiving your disbursements. So take, for example, you receive your disbursement, your PPP loan application funds on June the 10th. What that means is you may have made your rent payment for June on June 1st. But if you received it on June 10th, that means 8 weeks from there will take you into August the 10th. So that means you still have July rent that you can pay as of July 1st and August rent that you can pay as of August 1st. And that will then be covered as part of the covered period, and you don't have to opt for an alternative covered period. And for that reason, that was not made available for non-payroll costs. Okay. Forgiveness amount calculation. So let's talk about the 60% payroll cost limit. Your payroll costs 60%, and you'll hear me say this over and over and over until you get tired. 60-40, 60-40, 60-40, okay? So 60% payroll costs, 40% non-payroll costs, which is rent, utilities, interest, etc. If you use less than 60% on payroll cost, only partial forgiveness will be allowed. And that is why I always keep talking about the 60-40 split, because you want to make sure you optimize on the 60% payroll cost. If you use less than that, then you will, we're not saying you will not receive any forgiveness, but you'll receive partial forgiveness, and part of the other amount, or whatever the balance will be, you'll have to end up paying back. So let's take a look at an example for a partial forgiveness computation. If you received PPP loan of $150,000, and this example here that we're talking about, that will not be taking into account any full-time equivalent waivers and or less than greater than or equal to 25% payroll reduction, okay, for an employee. So let's hypothetically assume you received $150,000 of PPP funds, and during your covered period, you used up $80,000 towards payroll cost. And then the non-payroll cost related use of funds was a balance of it, which is $70,000. So in this scenario, clearly we note that only or less than 60% of the $150,000 was used towards payroll costs. If you'd used up to 60%, or if you wanted to use up to 60%, that would have meant that it should have equated to payroll cost related use of funds to be equal or greater than $90,000. In our scenario here, we're at $80,000. So when you're computing your loan forgiveness amount, assuming all other waivers are in line, then you would be at a loan forgiveness of $133,333, which is basically $80,000 divided by the 60%. What this means is you'll be paying back that $16,666 or odd dollars over either a 5-year 1% interest period or a 2-year 1% interest period based on when you received your funds. Very important to understand this. So with this table here and this example here, the takeaway is your payroll costs related use of funds. Make sure it is at least 60% to optimize on your forgiveness amount. What are your eligible non-payroll costs or expenses? So as I mentioned before, one of the key criteria for you to be able to apply for PPP loan was that you should have been in business as of February 15th, 2020. To that same token, what that means is any other non-payroll costs that they're allowing you to deduct or use these funds towards, all those commitments should have been in place as of February 15th, 2020 as well. Let's take an example here. So if you had, if you were in business as of February 15th, that meant you had a lease on your business and you're paying rent as of February 15th, okay? You had utilities that you had signed up for, telephone, internet, so on and so forth. That is one of the key criteria here. Okay. Let's take a look at some of the eligible non-payroll costs now. So interest payments on any business mortgage obligation or real or personal property. So this, it took me a couple of readings just to understand exactly what they meant. The first part of it, pretty straightforward. Interest payments on any business mortgage obligation. So if you had a loan on your business that you were paying as of February 15th, any interest portion of that, you'd be able to take as a allowed or eligible non-payroll cost. But the second part of this is the real or personal property. So this is something that took a little bit of reading and then some clarification from the SBA regulations. But what this means is if you have any interest payments on, let's say, your copier lease or other items that you've bought for the business, then you'll be able to take advantage of that as well. The second piece here, as an eligible non-payroll cost, is payments on business rent obligations, real or personal property under a lease. Again, this took 2 readings. The first part, very easy and straightforward. Payments on business rent obligation is rent that you're paying on your office space that you're renting out. The real or personal property under a lease was something that we needed clarification on. So here, what they've included, which is pretty cool also, is a lot of firms will rent, let's say, copiers or postage machines or storage spaces. So any rent that you're paying on those real or personal properties under a lease, those are also allowable, eligible non-payroll costs. Business utility payments for the distribution of electricity, gas, water, telephone, or internet, straightforward. As I mentioned before, non-payroll cost is eligible for forgiveness, A, if it was paid during the covered period. So you need to make sure that it was paid during the covered period. Doesn't necessarily have to clear your bank, but you need to have issued the check during the covered period. And it was incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. So let's take for an example, and we'll stick to my example of June 5th, you receive, June 10th, you received your PPP loan funding amounts. Your 8-week period, assuming that we're going to use 8-week period, ends August 10th. Now, your July utility bill may not come to you until after August 10th. But the mere fact that that expense was incurred during the covered period, even if you pay that amount August 15th, you can take that amount as part of your deduction forgiveness. We're back at the 40%. The non-payroll costs cannot exceed 40% of total forgiveness amount. If it does exceed that, that means you use less in your payroll, and thus the amount that will be forgiven will be less than what you received, and you'll have to repay back the amount that was not forgiven. Okay, here's another big one. And this clarification came in last week, late last week, or middle of last week. Owner's compensation. So we're also a small law firm business owners. A lot of this will apply to us. Very important that we understand exactly what it means for us. I know there's a lot of text in this, but I was trying to reduce it, but couldn't, just because there's some information that's in here. I may not speak about it, or I may speak about it. You won't get it, but just the mere fact that you'll read these presentation material after the fact will probably help clarify what I was trying to say, what I'm trying to say. Okay, owner compensation forgiveness, C corporation, owner employees, right? So what we're talking about here is the owners, not the employees, but the owners of the businesses. If you're C corp and you're taking or drawing payroll, not your draws or dividends, but you're drawing payroll, you're on payroll of the company, and assuming you'll be at 100,000 or more, then you will be capped at $20,833 cash compensation. And this is based on the 24-week computation period, okay? If you're at the 8-week, which was the prior CARES Act, at that you would have been at $15,385, but with the new PPP Flexibility Act, it's bumped up to $20,833. And I'll talk right towards the end of this. It's very much beneficial with the 24-week because it gives you a little bit more that you can apply funds that towards your own owner compensation perspective as well. Similar to the C Corp, S Corp owner employees are also limited to a max of $20,833 cash compensation. And this is assuming they're at the 100,000 or more annual compensation, which if averaged out over 12 months times 2.5 would come up to the $20,833. Schedule C and Schedule F filers. So the Schedule C is the self-employed sole proprietors. And this is where this becomes a very big advantage in terms of the 24-week period. If you had applied and you received your PPP funds, again, similar to S Corp, C Corp, you would be capped out at $20,833. But let's take an example at a Schedule C. So let's assume you had your 2019 Schedule C, and I'll look at the example from a pre-PPP Flexibility Act, and then what happens with the PPP Flexibility Act being applied to it. So had the rules not changed with the PPP Flexibility Act and you were still at the 8-week period, what would happen in those scenarios is you would have received, assuming it was $100,000 capped, you would have received $15,385. Over an 8-week period, no, sorry, my bad. Let's repeat that. You would have received $20,833. 100,000, 12 months, average 2.5 times, $20,833. If you were to cap that at 8 weeks, then the max that would have been forgiven for you from an owner compensation would have been $15,385. So that would mean the balance of it, which would have been $5,500 and something, would have had to be repaid, assuming that you had no other rent or utilities or interest or allowable non-payroll related costs. And that's usually the case with a lot of Schedule Cs because they may not be renting office space, or they may not have a loan on their business, or utilities because they're working out of a home office and so on and so forth. Now with the 24-week, you should be able to take advantage and get forgiveness for the full 100% that you received, because you are now capped at 100,000 over 12 months times 2.5, which equates to 20,833. So big advantage there. Partners meaning those who are K1s or K1 recipients from their LLCs. Their max would be again at 20,833, and that's based on the fact or assumption that they are capped at the 100,000 as well again. And one other big thing that came out of the Flexibility Act and what was released last week is you cannot include any retirement or health insurance premiums paid on behalf of the partners. Initially, when the applications were being made, you were able to include those to be able to get your PPP forgiveness loan funded with the assumption that you had retirement and or health insurance premiums in the computation. But now when you'll be applying for your forgiveness, unfortunately, you'll have to deduct those. But fortunately, if you're fortunate enough, you should be able to use those funds that you may have received for your retirement or health insurance towards other employee payroll and extend it up to the 24 weeks. The biggest thing that also came out of this, and you hear me talking about biggest thing all the time, because everything that comes out of these regulations is always big for us as accountants. If you are a solo and small law firm entrepreneur, you may have other businesses also, you have multiple K1s, you may have ended up applying for multiple PPP loans for each of your other businesses as well. And you may have included your self-employment or owner compensation in those. With this new regulation, the interim final regulation that was released last week, they made it very clear that each owner employee and self-employed individual has only one 20,833 limit, regardless of the number of businesses they have interest in. So if you're an entrepreneur and you own multiple businesses, multiple K1s, and let's assume, we'll take hypothetically, you have two K1s, 100,000 each. Prior to the clarification, you would have been able to apply for forgiveness up to 41,666. Now, they're making sure that we're not abusing this system, or we're not taking advantage of the niceness of the SBA, and they're capping it at 20,833, saying, hey, we can't just give you carte blanche over your multiple businesses, but we're limiting it to just one K1. Okay, let's talk about the forgiveness. We're almost towards the tail end of the PPP stuff, and then we'll talk about the other CARES Act provisions. But let's talk about some of the forgiveness amount reductions that will also be as separate tests, and what you can do to make sure that you're in compliance so you can optimize on your forgiveness application. So as I mentioned, two separate tests. One is the reduction in your full-time equivalents, and the second is your reduction in employee salaries or hours in excess of 25%. So reduction in full-time equivalents, the key idea here is, because the PPP was released as a, we want to keep the employees still employed, we want to keep the economy going, but not by helping you to fund your other non-payroll related operational costs, but more payroll related operational costs, and keep the employees in line. They also want to make sure that you stay true to the fact that you maintain the same level of employment. Okay. Before I cover the example at the top, one key thing I want to mention here is when you're computing your monthly full-time equivalents, you base it on either your full-time equivalent employee time period of February 15, 2019 to June 30th, 2019, or January 1st, 2020 to February 29, 2020. So what I recommend you do here is you compute your full-time equivalents for both these periods, and naturally, to optimize on your forgiveness, I would use the lower of whichever the two periods gives me the lower number of full-time equivalents. So the lower it is, the easier it'll be, or the better it'll be to either be able to match up to that number, or if you do happen not to meet this criteria, then it reduces or increases how much will be forgiven and reduces how much you'll have to pay back. Okay. For full-time equivalents, it's 40 hours or more per week. For part-time employees, you have the option of picking between one of these two. If an employee is working less than 40 hours a week, then you get a fraction of it. So let's say, for example, an employee works 10 hours a week, and that would equate to 10 upon 40, which is a quarter, so 0.25 full-time equivalents. The alternate method is, for any part-timer, you would just assume and say the full-time equivalent for that part-timer is 0.5. So if you had, let's assume you had 4 employees working at 10 hours each. If I use the first option of fraction, then that would equate to 0.25 for each of the 4, and that would equate to 1 full-time employee or equivalent employee. If I use the alternate method, and I said I'm going to use 0.5 or a half for each part-time worker, those 4 part-time workers will now equate to 2 full-time equivalents. So you notice how you just bumped up from 1 to 2. So again, do your computations and use the higher of the 2, or whichever works out beneficial for you. Owner employees and partners are excluded from this calculation. So don't include yourself as part of a full-time equivalent. There's 2 new full-time equivalent waivers in here that if you're able to take advantage of, will then count for you and not against you when you apply for the forgiveness. One is the inability to hire a same or similarly qualified employee for open positions. What that means is, if you try to hire, let's say your full-time equivalent number is not where it needs to be, but you can show and document and say, hey, I've tried to hire, but I'm not able to, no one's biting for that position. At that point, you'll get a waiver and the reduction will not count against your forgiveness. Or if you're unable to return to the same level of business as of February 15th, due to OSHA or CDC or HSS orders between March 1st and 12/31st, then again, you have that waiver. Okay, the last point here, if in addition to the full-time equivalents, if you happen to reduce your employee salaries in excess of 25% or hours also in excess of 25%, that will count against you when you apply for your forgiveness reduction. Now, one key thing to remember here is only the amounts over the 25% will be applicable to the forgiveness reduction. Any amounts under the 25% will not be applicable. As I mentioned before, documentation is everything. Make sure you maintain all your supporting documentation when you apply for your PPP forgiveness, and also supporting documentation for when you applied for your PPP loan. The documentation here could be all payroll documentation, either from third-party providers, bank statements, canceled checks. For your non-payroll cost documentation, make sure, again, canceled checks, ACH details, your lease agreements, mortgage statements, utility bills, etc., etc. Retain all these documentation, including your backup, for at least up to 6 years or more after the loan is forgiven or paid up in full. The balance of the loan that is not forgiven, you'll have to unfortunately end up paying back. But as I mentioned before, it's a nominal interest rate. It'll be either a 2-year maturity 1% interest or a 5-year maturity 1% interest. And that all depends on the date of loan disbursement. So if your loan was received prior to June 5th, then it'll be at a 2-year 1%. If it was post June 5th, it'll be a 5-year 1%. There's no prepayment penalty. So if you do happen to hit the jackpot and get a lot of business, then you can always pay it back as well without any prepayment penalty. The loan forgiveness, big item here, is not considered taxable income. What that means is if you had $150,000, out of which $133,333 was forgiven, that $133,000 will not be considered taxable income. To the same token, the expenses that you use those funds towards currently are not tax deductible either. And for now, this is what the case is, okay? So the intent of the Senate bill was initially to allow for the tax deduction of these expenses, but that is not the stance of the IRS. But I do know, again, after July 4th and post, There is a legislature in place to at least hopefully allow these expenses, but until that comes out, these expenses are not included or are not tax deductible. As promised, this is the complimentary PPP Forgiveness Application Calculator and Creator. You'll have this in your handouts as well. The website to go to is applyforppp.com/forgiveness. This is a website that is being updated as the new regulations or updated regulations come out. But one thing I'll say about it is we don't endorse it. We don't. We're not the creators of it, but we've used it. At least I've used it, and a lot use it more user-friendly than actually trying to work through the SBA applications directly. Okay. One of the key things you'll note on the website here is they mention the SBA application stipulates work time of about 3 hours or less. If you use this calculator to help you walk through, should be about an hour, hour and a half or so. So that right there tells you from a ease of usability of this forgiveness app. Okay, let's talk about the last couple of other CARES Act provisions that are in there. I know I'm a little bit over or getting just some time, but we'll just continue with this. And I hope it's providing great value to all the attendees. So we'll talk about some other, outside of the PPP, some other credits or features that are available in the CARES Act. We'll look at the employee retention credit. So in the employee retention credit, the CARES Act provides a payroll tax credit for 50% of wages paid. There are caveats to this. And what this means is if you did not get the PPP loan, there are certain stipulations, of course, in this. If you did not get the PPP loan, but you still continued employing employees, you will be able to get a tax credit for up to 50% of the wages paid. So if you paid, let's say, $50,000 of wages during a period, you can get up to $25,000 of that as a credit. Caveats here is the operations were fully or partially suspended due to a COVID-19 related shutdown order, and your gross receipts declined by more than 50% when compared to the same quarter in the prior year. So you keep taking each quarter, and as long as your gross receipts were less than 50% compared to the prior year, same quarter, then you can keep applying for the employee retention credit. This credit is for wages that were paid and eligible costs incurred from March 13, 2020 through December 31st, 2020. There's a limit of up to $10,000 per employee. So if you had 10 employees, you could have up to $100,000, provided you meet the other criteria as well. Payroll and self-employment tax deferment. So remember, the prior slide was a credit, so it's money coming back to you. This is just a deferment, meaning you will defer the payment, but you still have to end up paying it at some point down the road based on how far out you defer it. So employer payroll tax deferral allows your business to postpone paying some payroll taxes due in 2020, so you can push it out to 2021 and 2022, okay? What can you defer? It lets you defer only the employer's share of the Social Security taxes on wages earned from March 27th through December 31st. So the employer portion of it only. The employee portion, you would still have to go ahead and deposit that to the Federal Bureau. Prior to the PPP Forgiveness Act being passed, if your PPP loan was forgiven, you were not eligible, but now with the Flexibility Act, you can take advantage of this credit or deferral that's provided. Again, this is a deferral, it is not a credit. Okay, so this is a deferral, meaning you will still have to pay it at the end of the day, but you're just pushing out. What this helps in is more from a perspective of cash flow. Net operating loss deduction. So we all know with the Trump laws, tax laws that came into play, we were all getting a 20% reduction on our qualified business income. And what that basically transposed to or stipulated to is that you're paying taxes on only 80% of your taxable income. Now with that also, if you had a net operating loss, what it basically became that any net operating losses that you had in 2018, 19, 20, and 21, so on and so forth, you could not do a carryback on them because of the 80% or the QBI reduction. However, with the CARES Act, that has been eliminated, and you are now allowed to utilize your any net operating losses, NOLs, that were incurred in 2018, 19, or 20, you can carry it back 5 years. What that means is if you did have a NOL, let's say, for example, in 2018, you can now go ahead and amend your 2017 or 16 or 15 returns and apply the NOLs to those. Prior, that was not allowed. Okay, so this is something that, again, will be advantageous, especially in 2019 and 2020. So let's say 2020, if business is low and you expect an NOL, once you file your 2020 return, you can elect to take your losses back 5 years and amend your 5-year returns and recapture some of those profits and or taxes that were paid towards any profits arising then. Retirement plan benefits. You can withdraw up to 100,000 from defined contribution, and these will not be subject to tax withholding or early distribution penalty. So we all know that if we were to withdraw from our tax retirement plans, normally we would have to pay a tax withholding penalty and an additional 10% early distribution penalty. But now you're able to take advantage of not having to pay that, and you're eligible for taxation over a 3-year period also. If you have employees, you can also provide your employees up to $5,250 in tax-free payment of student loan obligations or other educational assistance benefits. In the past, if you provided such benefits to your employees, you would also have to include it in their income, and they would have to end up paying taxes at the end of the year. But now you can provide it to them as a tax-free benefit, and you can also take that deduction in your business. The final two, we'll talk about the paid sick leave and FMLA and the advanced refunding of employer tax credits. This is part of the Title III of the CARES Act. So the paid sick leave and FMLA limitations, one of the big things that came out of here, and we noticed this a lot, where if you had employees that either were taking care of family members who were COVID-19 positive, or they themselves had COVID-19, one of the Act requirements or the paid sick leave requirements was that you would still have to continue paying them. And then the question came up, we're still paying them, it's a paid sick leave. So what happened was there was a tax benefit or a tax credit that was provided out of this. So any employees who were still paid due to the fact that they either contracted COVID-19 or tested COVID-19 and had to be quarantined or self-quarantined for the 14 days, you would end up paying them the paid sick leave. However, you had the option, or you can take advantage of the fact that whatever you're paying them, you'll get dollar for dollar credit back in your payroll. So either the IRS will refund you the dollar amounts, or you can deduct it from what you have to pay the IRS for other tax obligations, payroll-related tax obligations. In this case, if it was an employee that was COVID-19 positive, then employees would be eligible for credits up to 511 per day over 80 hours, which would equate to 5,110. If there were employees that were taking care of family members or their kids due to schools being closed and things like that, you had the other care, the paid sick leave for other care, and with that, you would pay them 75% of what their regular earnings were, and you would be able to take a credit of up to $200 a day. And once they were covered on that 80-hour period, there was another extension on that, which was combined with the FMLA for up to 400 hours. So this would stretch out to up to $12,000. But even for that, part of the CARES Act was you would be able to get a dollar for dollar credit for whatever you paid your employees during that time, which is pretty cool, actually. So it was, in essence, you're making sure that your employees are taken care of, either whether they're sick or they're taking care of their loved ones. part of the credits, how do you get your money back? So there were two ways. Either you could apply using a form and requesting the money to be refunded to you by the IRS, or you could take advantage of the fact that if you had other employees on payroll and if you had other payroll related tax liabilities to the federal government, then you could apply any credits that you want refunded back to you and reduce the amounts that you have to pay to the IRS for payroll liabilities and take that credit in lieu of employers having to rely upon the tax refund. So this was pretty cool also. So it was basically you make the payment, you apply it against any monies you owe from a payroll liabilities perspective to the IRS, and you get that money back right away versus having to wait for a tax refund. With that, I come to the end of my presentation. I'm now open for any questions. So feel free to ask any questions.
Thank you so much for that very informative presentation, Nish. It was very helpful and has allowed us all to recognize the opportunities available through the CARES Act. Before we get to the Q&A, just real quick, I just want to remind everybody that you can download this presentation and the reference materials via the handout section on the webinar control panel. And then also as we get into the Q&A, just please refer to the questions section on the webinar control panel. So let's get into the Q&A. We are a little bit over time, so we'll try to keep it short and sweet, and just want to make sure that everybody knows that we do have all of your questions recorded. So we will reach out to you afterwards if we don't have a chance to get to your question today. All right, so question number one. So the applications that you covered, so there's a question, are those applications final or can we expect to see a change?
That's a very good question. So as of now, consider them final, but like everything else that we've been noticing, it's been an ever revolving arena. We do expect some additional changes to come through those forms, but when you apply for your forgiveness and using the application that you're using, if there's no other more current application available, then that will be considered as at the time of your application as a final application.
All right. Does the 60-40 split apply to loans disbursed prior to June 5th, or would the original 75-25 split apply?
That's a good question too. So the 60-40 split applies to all loans, irrespective of whether they were disbursed prior to June 5th or post June 5th. Big advantage. And to that same token, I'll just add this, the 8-week or the 24-week will apply to all loans that were dispersed prior to June 5th as well. So if you had a loan that was dispersed prior to June 5th, you can take advantage of the 24-week covered period, but you also have the option of the 8-week. But if you had the loan dispersed post June 5th, then you only have the option of the 24-week period.
All right, great. Why are C Corps eligible for medical insurance payments and S Corps are not?
See the smile on my face? Hopefully everyone can see that. So C Corps are eligible, S Corps are not eligible. And I'll address the S Corp part of it, right? So S Corps, in essence, they're technically eligible, but the reason why they say they're not eligible for health insurance and for retirement funds is because for S Corps, when the W-2s are run, any health insurance premiums paid are included in the first box one of the W-2 wages. So if you look at S Corps, it is considered as cash benefits, and that should be included in there. So they don't want you to add it in as a separate amount.
Okay. How does a Schedule C sole proprietor have staff employee payroll cost forgiven?
So if you're a Schedule C, it'll be the same thing. If you have staff employer payroll, at the time of application, you will include both your Schedule C net income for 2019, and then you will include any payroll that was paid for that covered period during your 2020 period. So in the computation, you'll be able to add both of those amounts in. It's a good point that's brought up here. I just want to make a quick note. When we're looking at LLCs and Schedule Cs, Schedule C filers and LLC K1 filers, when they're applying for their PPP forgiveness, that forgiveness will be based on or determined by your 2019 K1 or Schedule C. For C Corps and S Corps, that is determined by the payroll reports for the 2020 covered period.
Okay. If a K1 partner did not exceed $100,000 in 2019, how is the calculation made?
These are all good questions, actually. Perfect. So if for 2019, if you had a K1 in 2019, you did not exceed 100,000, and I'll just throw this out. Hypothetically, if you exceeded 100, or if you're projected to exceed 100,000 in 2020, the amounts that will be taken into account will be your 2019 K1 amount, irrespective of what your projection will be for 2020. To the same token, and I'll add this other thing for C Corps and S Corps, for owner employees, the way they're looking at it is it will be the lower of either 2020 or 2019 amounts that will be computed. So let's assume in 2019, you're on W-2 less than $100,000 annualized, and in 2020, you're projected to be 100,000 annualized, then the forgiveness amount will be based on your 2019. So it's the lower of the two for C Corps and S Corps. For K1s, they'll be based strictly on the 2019 K1. If you're less than 100,000, divide that by 12 times 2.5, and that's the amount that will be part of your forgiveness amount.
Great. Can software like PC Law be claimed under other expenses?
Unfortunately not, because that is more of a software related cost or operating related cost. The other costs, we had a whole slide out on it. The other costs that are included are interest obligations, right? So not principal payments, but interest obligations, rent, lease, unless it's PC Law. No, I'm not sure. Again, I'm second doubting myself. If PC Law, the software itself is under a lease, then that could be a different scenario. We'd have to look into that. But if it is just straight up monthly subscription, then no. And then the other costs were utilities and or rent obligations.
Okay. If you changed, for example, internet providers in March, would this prevent you from using this expense in the forgiveness application?
No. So you would still be able to use that utility expense as part of the forgiveness application, because you did have another internet service provider prior to that, and you just switched services. To the same token, I'll add this, is let's assume you bought a business, an existing business, after February the 15th. And you bought it and you created a new corporation, and that new corporation at that point was not in business as of February 15th, but just by the mere fact that the business that you bought was in operations as of February 15th, you as the purchaser of that business would still be applicable to apply for a PPP loan. So the same sort of rule applies for this.
Okay. So one in particular for a firm, a C, it says, if we had a full-time employee quit, can't we remove them from the FTE without issue? And also, is the 255 reduction overall or per employee?
Okay, so we'll take this as a two-part question. So whoever asked this question brings up a really good point. So when you're computing your FTE or your full-time equivalents, there's some other caveats in there. So if you do happen to have an employee that quits or voluntarily resigns, or you end up firing them for cause, right? Again, make sure you have documentation. So if they quit, you should have a resignation letter. If they resign, a resignation letter again. If you fire them for cause, you have your documentation that covers that. So if any of those three things apply, then those will not count against your full-time equivalent computation. And Cameron, repeat that second part of that question. I just need to understand that again, 255 something.
So also, is the 255 reduction overall or per employee?
I'm not understanding that question. If you don't mind, just have them email me separately, and I'll try and understand the question and then address it, because I'm not understanding the 255 part of it.
Okay, absolutely. Next question, must rent be pursuant to a written lease or in a shared office rent, no lease?
It could be either or. So if you have a shared office space, then you can also have that portion that is applicable to you as part of the forgiveness. Or if you don't have a shared office space and you're encompassing the entire rent, then you will be applying for that full rent. Again, now I'll add to this. If you have a shared office space where you have the lease under your firm's name, but then the other attorneys or other individuals who are sharing office space from your end, the amount of forgiveness that you'll be able to take will be not the full rent that you're paying, but the portion of the full rent less what you're being reimbursed for as part of the shared office space rent that you're receiving as income.
Okay. And just a few more here.
Mm-hmm.
Can a company take advantage of the ERC and receive a PPP loan as well?
Can a company take advantage of the what? Sorry.
The ERC?
Oh, okay. So currently that is not, actually, let's just put it this way. So if you did receive the PPP forgiveness loan, you will not be able to take advantage of the ERC for the period that you're using the PPP funding. Once that PPP funding is used up and for that covered period, after that, if you're still eligible for the ERC, then absolutely yes, you can still use the employee retention credit in there. But again, as I mentioned, there are caveats in there. You need to meet certain criteria. So, and one of the biggest criteria in there is that your business volume should be 50%, and it's tiered again, right? So it should be 50% or more or less as in comparison to the prior year quarter, same quarter.
Okay. If a law firm is in a state that doesn't have state or local tax, is any portion of the federal tax forgivable as a payroll cost?
I would have to research a little bit on that. So again, Cameron, if you can email that question out to me, I'll certainly get back to either you or the individuals asking that question.
Absolutely. Let's see, one more here. So we have somebody, can you explain what you said about maximum forgiveness for someone that qualified under the 8-week time frame?
Okay, so the maximum forgiveness, if you qualified under the 8-week time frame, again, it'll be the same rules that will apply. So you have the 60-40. If you use up 60% of the funding that you received towards payroll costs and up to 40% towards eligible non-payroll costs, then you can either use the 8-week period to compute your amounts. And again, when you're using the 8-week period, that full-time equivalent computation, the 25% reduction computation, all that will come into play with that 8-week period. So the shorter the period, then again, you may be able to get all your ducks in a row to be able to get 100% or maximize on your forgiveness. If you end up using the 24-week period, which on a case-by-case scenario would be even more advantageous, then in that case also, again, very much similar to the 8-week, you can opt for either or, but the key criteria here is make sure A, 60% payroll use, 40% eligible non-payroll use, B, have your full-time equivalents. I'll add one more note to the full-time equivalents. If, as at the date of your application for forgiveness, you know and you've done your computation, you're not at that mark of your full-time equivalent, you have the option that as of the date of your application, you can hire someone and put them on, right? So let's assume hypothetically December 31st is that date of your application. On December 31st, you could technically go and hire 2 or 3 people to get your full-time equivalents up to level, and you'll get away with that waiver and not have to have a partial forgiveness on it. Okay, and then also getting your employees, making sure that their earnings are not less by greater than or equal to 25%, right? So get them to that as at the time of your application. Get all your ducks in a row. Get your full-time equivalents to the right par value. Make sure that the employees are being paid the right amount of salaries. If anyone has quit, resigned, or you've let them go, fired for cause, right? Then get those into your FTE waivers and reduce your FTE numbers. With all those computations in place, you should be able to maximize, especially with the 24-week coverage period, you should be able to maximize and optimize on your full forgiveness. That helps.
All right, and we're just at 15 minutes over, so one final question. Just real quick, just want to remind everybody, we are taking these questions into record and we'll be able to follow up with you afterwards. If we received a PPP loan, can we still take the Title III tax credits?
Yes, you can. Yes, you can. Provided, again, so key thing to remember is you have to make sure you segregate, right? So if you're using your PPP loans towards payroll related costs and you have a Title III credit that you also want to take, so when you're applying for your forgiveness, make sure you don't take into account that Title III credit into the whole forgiveness amount application, right? So don't double dip. Make sure you have your records clear and segregate the amounts so you're not double dipping and duplicating the amounts and saying, hey, in the PPP Forgiveness app, I'm including the Title III credit that I also took, and in that amount included, they're off in there. So make sure they're all separate, but yes, you can take that. You can take advantage of that as well, yes.
All right, perfect. With that, so that will conclude the Q&A. I just want to thank all of our attendees again for joining us today for this special webinar. And thank you once again, Nish, for taking the time to present to us today on the CARES Act. It was very helpful. Everyone will receive a recording of this webinar presentation tomorrow for your future reference. If you have further questions on the CARES Act, you can reach out to Nish via email at nish@neovisioncpa.com. And if you do have any questions with regard to your PCLR Time Matters software, please reach out to your account manager or email accounts@pclrtimematters.com. With that, I thank you all once again, and I hope everyone has a wonderful afternoon.
Thank you.